about the mortgage, because last week the mortgage rate just changed, so there's a lot of updates. And I'm very excited to introduce you today's guest speaker, Jessie J. She's from Jumbo Wise Capital, and she's a mortgage broker. I have been working with her for some cases and some deals, and one of them is super difficult on the loan side. But for her, it's like a just snap a finger and she solved the problem. So I think she has some really good acknowledgement to share today. So with further ado, let's welcome Jessie.
Thank you.
Yay! Okay. Oh, she got it.
Yeah. Thank you for having me here today. Thank you. I just want to do some mortgage update. When in August, when Julie invited me here, I think, okay, we update some policy and mortgage information, maybe just a 10 minutes presentation. And thanks for the government, they released a lot of new laws, policies this month, So I have a lot of things can talk. So I just want to introduce myself first. I'm in this industry since 2011, and I used to be like a processor, underwriter, and right now loan officer. And I have a partner. We have our own shop. So it's already 3 years till now. Because the reason why we become a broker by ourselves, because we want to have more power and flexibility to help the realtor and the buyer to get more right programs to help them, buy their house. There's just a legal disclaimer. I just want to let you know the information is for the general information sharing. If you have a really case related, legal advice, you have to talk with your attorney. Today I will talk about 3 parts. The first part is about the policy update, especially almost all the policy list there is effective on September the 1st. And the second part, I will talk about some mortgage update like the rate cut and the credit model thing. And the last part, I want to introduce you some special mortgage program we can use. The first one, like I mentioned, all of them actually effective on September. The first one is about the foreign ownership restriction. I'm not sure how many you guys is the new realtors, but this one is just specifically for restriction put on the nationality from China, North Korea, Iran, and Russia, right? And the government have the restriction for them if they are from nationality from these 4 countries, they may have a restriction to buy properties here. I will just do a really brief because I think most of you already know the details. I heard some cases from other realtors this and the last month because this new law for the commercial side, when the realtor want to help her clients to lease for the warehouse, the landlord already rejected because they're not sure how many percentage will consider as a majority owned by the U.S. citizen or the green card holder. So because everybody right now actually waiting the Texas Attorney General to release a procedure how to deal with this policy, what's exactly the definition for a lot of definitions they mentioned in this policy. So it's not really unclear right now at this moment. So this is the situation. That's why I want to share this information to you. We have to wait a little bit more details from the government for the process. And definitely, if they violate the law, they will have a penalty here. But like I said, we still have to wait the AG action. But for the lender side, I talk with all the lenders we work with, check with their compliance team. As I saw today, only one lender we work with, they just suspend all the visa holder from those 4 countries, like the working visa or the student visa or the exchange J1 visa. But for all other lenders, everybody waiting the AG action, so they don't have update any new overlay or restriction for those visa holder. So for the student visa or the working visa, for us, we still can do primary purchase for them as of now, right, at least. So there's no, I just put it here like the H1B, F1, J1, we still can do a primary purchase. And if the buyer is relocated from other state, for example, they relocate from California and they own a property in California and they buy the first property in Texas, they still can do that. The other state property doesn't count into it. So it's okay. And the foreign national, I used to have a lot of like Chinese investor, they purchase investment property here and then we're using the foreign national loan helping them. But right now, it's for sure we cannot do that. So this is for sure. We don't have to wait the AG action. And the last one is the thing is uncertain because like the borrower already have own a primary residence before September 1st. And right now they want to either upgrade or downsize to buy another one, and whether that one will count the second one, and whether they require them to sell the first one and buy the new one is uncertain. So this I put a question mark here because we have to know whether the government will give them the grace period to sell the property or no. So this is uncertain. We have to wait. And from the title part, I checked with the partner I work with. I work with the title company for more than 10 years. I checked with him, and he told me he checked with the underwriting company like First American Title, Fidelity. They're all underwriting all the title works, and their underwriter didn't have any update for their title language yet. So we still have to wait. The most updated one, the litigation case in last month, the judge dismissed one case because that was for two Chinese students. The judge think they have the legal rights living here, but actually for the immigration purpose, the student visa is not okay, have the intention to immigrate. So, but they already appealed the case, and we have to wait and see what's the result, maybe challenge reshape the enforcement. So that's the update from the lender side and the title side. This one is brand new, last Friday. I'm not sure whether you heard about that because a lot of like Chinese group or Indian group, they have this message, after the announcement, everybody, maybe you see the news, right? A lot of people already on the flight and they just, take off and they cannot leaving the United States because the government, just a new executive order, they put 100,000 fee for the H-1B application. And a lot of people really structure whether they will impact their legal status, especially for the working visa people. And on Sunday, this is from CNBC, and on Sunday, the White House press, they already confirmed that will be only impact for the new application. And they confirm, you can see this shows it's not for renewal or the current status. But the only thing they didn't confirm is if the working visa, they want to change it out. That is considered a H-1B transfer. They didn't confirm whether the transfer will consider as a new application. That's the thing. So for the renewal or the current one, they're still okay. But for the transfer, maybe there's some question uncertain. So if you have clients, they are working visa, make sure asking them whether you will change job recently. Because for the H-1B status specifically, on their petition, they only can work for one company. The company sponsored them. They cannot working for other companies. So when we have the petition documents, it will specifically list the company on the paper. So if like the borrower working for A and they change job and working for B right now, there may be a question from the underwriter. It's a legal issue because until the government, the immigration approve them, they can working for B. Before that, they're not legal working for the other companies. So this one just confirm renew and the current is okay, but not clear for the transfer. So you have to interview your clients if they're in this status. As long as don't change job, it's still okay. This is I want to share some requirement for not only the H-1B visa, for all the visa holders. When we're underwriting the loan, they have to make sure their legal status, the documents has more than 6 months, validated. If their expiration date on the documents will expire within 6 months, usually underwriter will asking documents to prove they can renew. But we have some lenders, maybe 10%, they can allow the exception. They don't have the renew documents. As long as on the closing funding day, their legal documents, their legal status, the ID is still valid, we're okay. This is not only for the H1, like for all the, even green card. If their green card will expire within 6 months, we still have this kind of requirement. This is a common requirement from Fannie Mae and Freddie Mac. Okay, and the next one, okay, the following two actually is not really related to mortgage, but I just saw this as a new. I want to share to you guys because I know a lot of realtors using the telemarketing way, right? Like text message or cold call to do the marketing. Before, I think you all know there's a do not call list. And before you call, you have to check the list, whether the client is registered, right? And right now from September 1st, they including the text message. So if you want to do text message for the marketing, first of all, you have to register with the state to pay the $200 registration fee and the $10,000 bond. And then you have the right to do the telemarketing for the texting. But for the new clients, you have to receive a written agreement from them before you send the text message. They agree you to send them, then you can do that. Otherwise, they have the right to sue you. And the violation is not based on person. It's based on the text message, how many pieces you send to them. So the penalty, I also mentioned here, this have the quiet time. You cannot send the text message, even they allow you to send the text message them. You cannot send the text message before 9 or after 9 on Monday through Saturday. Sundays before noon or after 9 p.m. You cannot send text message for marketing to them. And the penalty will be $500 up to $5,000. So it depends on how the clients sue for the violation. So this is the thing I want to share with you to make sure protect yourself. Don't do that. There's some exceptions, but I read the whole policy. It's nothing related to the mortgage company or the realtor companies. So but you still have to maybe check with your attorney for the more details how to do that. But just make sure This is the one just for update. This is the HB 3611. They update the penalty for the signal. Like when you do open house, you put a sign right on the public in the community. And right now, the existing one is you cannot put a sign on the public road, right off the way. The new change is they update the first offensive grace period, and then they increase the civil penalty price. So make sure just follow the HOA and the city requirement before you do the sign. This is just want to share to you guys, not related to mortgage. Okay, so the next part is about the mortgage update. The first thing is really easy. Next year, the new conforming loan limits increase to 19,000. Right now, it's 806,500. So it's not a big increase, but we already have lenders, they can accept this number. Yeah.
That's the limit for conventional?
Yes. Above that, it will be jumbo loan. Yeah, so there will be like 2026 limit, but right now we already have lender can accept this number as a conventional loan. So if you have a clients, their loan size is between like the 806,000 to 819, we can start to do the conventional for them, because the conventional loan and the jumbo loan have totally different guideline and the requirement and the rates. The next one is about the credit. This one is not launched yet. Expected launch it on fourth quarter this year. They just bring the FHA, FA, they bring the new credit model, the FICO 10T and the Vantage Score 4.0. This two actually just adding the rent utility information to the model. And for the FICO 10T, they just consider the last 24 months history information, like the balance, like the usage of the borrower into their score. And they have a third version. This is not sure yet. The buy now, pay later is like when the borrower buy furniture, they do like a zero interest for 18 months. Those kind of program is called buy now, pay later. So this one may be released later after the other two release, because this one, whether how much impact to the credit score depends on how accurate the creditor can provide the information. So, but for all the lenders, they already adjust their, the credit report company, they already start to adjust their system, but we didn't get official announcement. We already using that. This is a really new model, but we can expect it in maybe the fourth quarter, next month or maybe December. But the thing is, like, I want to share with you guys, a lot of buyer ask me why the score I checked on my app or from the Credit Karma is different from the lender pool, right? Maybe sometimes a few points different, sometimes maybe 40 points difference. Because that's the reason. All the sources will use different models. Like a Credit Karma, they use the Vantage Score 3.0, and the bank or the credit card app, they're using the FICO 8 or the Vantage 3.0. And for most of the lender right now, we're using the FICO 2, 3, or 5. So different model, they have different risk factor. So that makes the score is different. And then later, if your clients ask you, you can let them know and educate them, have expectation. When the lender pull their credit, maybe their credit is lower than what they saw. Because usually for conventional, for example, even jumbo, if the client's credit score is more than 780, this is a tier 1, the best grade level. And every 20 points will change the grade levels, and their rates may different. Definitely first-time home buyer may be another topic, but usually it's like every 20 points is a grade level. And there's some common misconceptions I want to clear. The first one, the borrower think, okay, I can pay off all my debt before I start to buy the house, or I can close the old credit card to boost my score. Actually, maybe not. If the borrower have a difficult for qualified loan, for having those debt, they definitely have to pay, right? But if this is not related to their debt to income ratio thing, they just want to pay it off and to boost their credit, it's not a really smart action in the short term. Because usually, when you pay off when you pay off a debt, you have to have an equivalent amount new debt report to your credit report. Like, I paid off a 10,000 loan, I should have another 10,000 new loan reported too, and then they can make this weighted keep the same. Otherwise, their score may drop, because like the length of the credit history and the credit mix have 15% and 10% impact for their credit score. So if they are okay for qualified purpose, they just want to boost the score, ask them to check with the loan officer. We will use our system to do the credit score analysis and give them a specific instruction how much you can pay, which card you have to pay, and even how many you have to pay down or pay off. Like, I have clients before, I asked them to pay down his Discover credit card to the balance $20, and he think, okay, just $20, let me just pay it off, and then the score dropped another 4 points. And I asked him to spend another $20, and then we do the risk score again, and then we got the score we want. So not always pay off is the best option. It depends on their the weighted for their credit histories. So don't let them pay them off before they talk with the loan officer. Okay, this is the first one. The second one is, as long as the past due or the collection is paid, it's not affect their credit score. This is not true, because all the past due more than 30 days and the collections will report it and stay on their report for 7 years. So we can see it, even they already paid it off, paid to current, or somehow the credit just closed that account, they still have the records on the report for 7 years. So you can see this is the last week news from CNBC. The credit score nationwide have fallen 2 points, but this means a lot of people just past due, especially for student loans. It's called this is caused by the student loan, because right now all the student loan is no longer in the default payment model, so they have to start to pay, and a lot of people just have the delinquency. So that makes, so just remind your clients, pay on time, please, especially before they buy the house. And the next one is for the multiple hard pulls with different lender will not affect their credit score. That is not true. It depends. I already mentioned like different model or different, even lender, we still have different models for the credit, right? So if all lenders use the same credit model and it's all for like mortgage shopping around, and within 14 days, they will, for the screen purpose, they will consider it as a one pool. They will not affect their credit score too much. But if the lender, even all for shopping around, and the different lender use different credit model, even within 2 weeks, they may drop the credit score. But how many points they will drop, I don't know, because it depends on their history, their whole credit file thing. So just tell the clients you can shop around, but not too many. Because I used to have a client, he purchased an investment property on month 1. And after closing, he purchased a car, and he just went to one dealership, and the dealership helped him shopping around. And the following months, when he came back to me to buy another investment property, because our previous credit report already expired, only have 3 months validation. The next month, that previous credit report cannot cover the new closing date, so we have to pull a new credit report. When I pull it, his credit score dropped 80 points because the dealership helped him shopping around, and they pull his credit 16 times on the afternoon. So that really hurt. So don't do that, right? Especially when you're shopping an auto loan, don't allow them to pull your credit several times because they just sit in front of the computer. You don't know how many lenders they send out, and you don't know how many times they pull your credit, because each lender will pull their credit. So that's really hurt.
Question. Sorry.
Yes.
Because let's say the auto loan department, actually they are broker, they're not like one company. Let's say they work with Capital One, but actually they are brokers. They shop around Capital One, Ally, everybody. So all those companies pulling his credit.
Yeah, that's right. So the way I know before is like, usually you can search the local credit union online for their auto loan program. Sometimes they have the flyers, you just print it out and bring to the dealership. This is like a trick. And you can let them know, okay, on the market right now, this is the lowest interest rate I can see, and whether you can match that or you can offer me the same thing. And if they said okay, and then you can allow them pull your credit for one time, and do not allow them to helping you shopping around, because that way you don't know how many times they will pull, they will send how many lenders, So that's the thing. Okay, the next one, I just want to share something information about the big three credit bureau. For the realtor, sometimes if you have the clients, you helping them list the property out, you have to check the background from the tenant, right? This is just for information sharing. So I'm not sure what kind of system you're using. Like the turbo tenant, you don't have a choice to choose which bureau you want to put the credit, right? But if you're using the system, they have the choice you can pick. I recommend you using TransUnion, because all the creditor, they report the information every month to the bureaus. They have to pay an annual fee, and for the admin, the system fees. TransUnion is the cheapest one. So a lot of middle or small size company, they willing to pay the less money to still complete their compliance action thing. So this too is really expensive, especially Equifax, almost triple than the fee on TransUnion. So for the small company, sometimes if they have to report to the bureau, and they can only just report one, they always choose TransUnion. So if you want to have a whole picture for those people, for the tenant, you just using the TransUnion data, you can have a more better idea. Sometimes the TransUnion have a lower score than the other two because they have too much information. They can collect it. So that's just to share the information for you guys if you need it. The next one is about the rate. Last week, we have the rate cut, right? The federal cut of 25 bips. Right now, the new range is between 4% to 4.25%. And this is the first cut this year. And they definitely is a defensive move. It's a risk management cut. And I have many people, even for refinance, before the meeting, everybody is waiting the September 17th meeting after Fed cut and the mortgage rate will be lower, and then we can buy house, we can do refinance. But the fact is not, the vote breakdown, I just put here for information. The voting number every time is 12 people. All the 7 board members definitely will vote it. And the other 5 is from, they will pick the 5 of the 12 the Reserve Bank presidents. Every time they have a schedule, and those 5 people will vote it. This time it's 11-1. And the majority, the 11 people, they think the inflation is still above the target, and they have to cautious to for the falling as a small step or the speed up. And this one definitely is from the new governor, Mr. Miran, And you can see this is the issue is right now is a split vote. This is the reason why we call it a split vote. Even the voting number is 12 people, but every time for this fat dot, we can see 19 dots, because all the 19 policymakers, it's a 7 board member and all the 12 Reserve Bank presidents, they will set their expectation for what's the goal they think the federal rate will be. So this is their projection. This year will be around like a 3.6. And I zoom in this, you can see right now the line have a 6 dot. This is where we are right now. And you can see 2 people think we have to cut one more time. I mean, this is another 25 bips. And this side is have I think it's a 7 or 8 or 9. I forgot, 9, I think. This part, they think we need to drop to this part, and that means we have to have another 2 cut. They said the 1 cut is about like 25 bips. So right now, their projection is between around like a 3.6%. That means there's either 1 or 2 more cuts. Because we don't know whether they will do like 2 25 bips or 1 50 bips. So that's why it's a 1 or 2. We don't know. But I just want to share you what's going on for the mortgage rate after the Fed meeting. This is the national average 30 years fixed rate from August 1st to yesterday. And you can see this point is before the meeting on September the 17th. And after they do the announcement on 17th, we don't have any reaction from the lender, from the lock desk. But after the chairman do the speech, and I start to receive almost all lenders start to send an email. Right now, lock desk is closed, and we start to changing the rate words. And you can see from that afternoon, the rate is like this. So this is not only for this year. This is for last year. You can see the lowest point is last September, and that one is in November. Last September, they cut 50 bips. So you can see always like this. So why when Fed cut the rate, our mortgage rate is not lower? That's the reason. Because the Fed cut the rate is a federal funds rate. That is the interest rate the banks charge between each other for the short-term overnight, for the reserves. It's not for long-term. That short-term will impact for credit card, the car loan, and the business loan. Business loan sometimes a 5-year ARM, 7-year ARM, right? So they all consider it as a short-term. And then those short-term rates and the market expectation, the inflation, and also the mortgage-backed security investor demand all will impact the long-term mortgage rate. And we always see the 10-year treasury yield as a reference because based on the historical data, all the borrowers, they may maybe sell the property, upgrade or downsize, or refinance, or sold the property, or paid it off, average in 10 years. So that's why the mortgage rate is always, referenced with the 10 years treasury yield. That's the reason. So the Fed rate is just one of the factors maybe impact in the long run for the mortgage rate, but now it always not the only one. So every time when the Fed cut the rate, the mortgage rate may not cut. So I saw maybe 80% of the time when I observe it on the day of the meeting, and the second day is the worst day, and the third day they have the technical pullback sometimes. So especially for the case I'm working on during this time, I told my clients, if you want to float the rate to process, I can do that for you. I just give you the code every day and until the day you want to lock it. So I used to have the clients different way. Sometimes I send them like 15 days, every day I send the code and they monitor the trend. And until the day right before the meeting, they thought, okay, this stop. They don't even lower. They want to lock it. They don't want to wait the meeting. And sometimes it's like when they saw the rate is higher, they said, wow, can you offer me the like 2 days ago? I think no, it's impossible. So I told them, if you still want to wait, maybe we just wait 2 more days. Usually on the third day, they have the technical pullback. Maybe they can, improve a little bit, but that's not a guarantee. This 2 years works. In the future, I'm not sure. So that's the thing. And that's about the rate. So I just want to share you why, not always the same. So this is the reason. And the last part is about the mortgage product. For usually the really common loan, like conventional FHA, VA, I didn't mention here because for those loans, especially the borrower can qualify, the only thing they'll do is shopping around. They want a lower rate and a better fee. We definitely is really competitive for the rates and fees. If you clients have scenarios, even conventional FHA, VA, or really special case like Julie mentioned, a difficult one, you can contact with me. I can help. Even just give them one more option for a lower rate, because our rate always competitive. That's our job, daily. In the morning, the first thing, check the rate, which bank is the best one. So let me know. I can help them. Just send a code. Today, the products I want to share is some special one we recently used, and maybe can help you guys, the clients to close the deal. The first one is a virtual closing. This is a true virtual closing. Not one paper is signed by in person, or the web sign. It's all online. Because this client, he talked with Chase for 2 weeks before the realtor asked him to talk with me. And during those 2 weeks, the banker with Chase never asked him, where's your wife? Because they do the primary purchase, and the wife is in China at that time. And nobody, even the realtors knew, nobody know we are in Texas. It's a community property state. When you purchase primary, they have to own the title and they have to sign the closing paper. And when he come to my office, the first question I asked him, where's your wife? He said, in China. No way fly back before closing. So, and at the same time I talked with him, I checked the US embassy in China, all the embassies in China for the time schedule, no available before the closing day. So there's no way she can do a power of attorney and overnight the original documents back. And then I told him, okay, I can do the online, the totally true virtual closing, but this lender maybe not my best rate lender, but we can fix the issue. Just, for the rate, maybe a quarter difference, but they can fix the issue. So we're using this, and they're not really good at English. So at the closing day, the husband was in my office. I just helping them, and the wife is in China, and we do the totally online closing, and the wife verified the ID through the system and sign all the documents and meet the online notary first, and then the husband in my office signed his part, and the total is about like 45 minutes, and we're done. And all the title, all the documents, signed documents back to the title, back to the lender, and then we find it right away. So it's really easy. If the clients have the problem to prepare POA, or they don't want to do the POA thing and they want to sign in person, this is an option for them.
Is this eligible for FHA conventional
Yeah, the regular one, yes. And the next one is for the no credit score conventional loan. This one is I work with Julie for her clients. This borrower using debit card every day. He doesn't have credit card. When I pull his credit, the only thing on the report is a auto loan paid out 3 years ago. And usually, if you have a trade line and you don't use your trade line or the credit card, you don't have those keys, right? Even you have it and you never use it, about like 2 years after, they will not no score on the report. That's the thing. So when we pull his credit report, there's no score, just one trade line for the paid off auto loan there. And I have a lender, they can take this kind of conventional loan without any score. And the rate I compared with a regular conventional loan, this rate just like maybe under tier 1. So it's a really good one. Just like 1 is higher than the best one. So this is a good one. The thing we're using is a verification of rent to verify he has a rental payment for the last 12 months with the leasing office on time. And also we ask a 12 months utility bill payment to make sure there's no delinquency. And then we just fund the loan. So this is a special one. If your clients doesn't always use debit card or cash, they don't have any credit score, we can use this helping them. Yeah. The next one, this is a brand new. This is a true asset, asset products. No job, no income, no debt to income ratio we're using. We just use the asset coverage ratio. The thing we will count, we put the credit, we count how many loans, like the auto loan, mortgage on their credit report, and also the credit card balance. And we count all their checking, saving, retirements, investment account. And we calculate the debt to asset ratio. As long as the ratio is below 60%, we can fund the loan. For this loan, the maximum loan to value ratio is 70%. And the maximum loan amount is $3 million. And they have to have the score more than 700. And but we need to season and source 3 months bank statement. And we need a 12 months reserve for the new purchase property. For the reserve part, for example, your clients have a foreign asset, maybe in Europe, in China, they have account, they have a lot of money there. We can use this account as long as they can provide the most recent 3 months history. And they don't have to transfer the money to the US bank. They just keep the money in the overseas bank. We just need the documents, and we exchange the currency to US dollars and using that to qualify the whole loan. That'll be okay. So this is a brand new one. And the average closing is like a 10 business day. It's good for like self-employed, the small business owner, or they are working for a family and they have a really high asset, but they have a low income. So for this case, we don't care whether you're working for family. We don't need a 2 years history, those stuff. We just need you have money in your account, not cash, okay? Just you have money and then you can qualify. And this is a really quick speak. This is the rate for reference for you. I just pricing this morning for like a 720,000 loan. If we put a loan to value ratio 6% and the credit score 740, primary purchase with the ask score 30 years fixed. So this rate is 6.375%. It's not bad. For the conventional loan, I check for the same, not for 60%, 80% today. For the conventional, if 720,000, the rate probably about like 5.875% for 30 years fixed. So this is not too bad. So this is the one I want to share. The last one is for the buy before sell, especially for the current market. When you sell the property, it takes 3-4 months, even longer. I have a neighbor, they sold the property for 10 months. They listed now in January and they sold on October last year. So the buy before sell, even yesterday I got a call from the clients, the same thing. They asked me about this program because they want to buy a new house, upgrade, but they cannot sell the house, their current one, right, immediately. But they still have to use the money from the equity of the house. This is the one can helping them. So because this is like a procedure, I do a small video just share with you. I'm not sure whether they have, there's a no sound. Okay, I just tell you. So for this one, the way we do is we will evaluate the current house, and we do the appraisal. We check the conditions for the current house, and we calculate how much the equity we can use. We call this unlocked equity, and then if the lender approve for using those equity, we can issue a pre-approval without a sale contingency. So their pre-approval will show just like a regular one, and we start to do the purchase transaction, and it's just normal, like 30 days, maybe 20 days, we close the new purchase, and the unlocked equity will directly wire to the title company for the purchase transactions, and we will not count the liability on the current house to their debt to income ratio. So when they apply the loan, basically when we do the calculation, it's like a first-time home buyer. They don't have any new, existing mortgage on their own. So this is the way we do. And after closing, they move in and they start to sell the house. You as a realtor, you can be the buyer agent for their new purchase transaction. You always can be the listing agent for sell their current home. And when they close, you start to sell the house for them. We will give you 120 days, like 3-4 months to sell the property. And if on the day 120 the property is still not sold, the lender will officially transfer the title from the client's name to the lender's name. But the realtor and the owner still have the right to sell until the day they sell the property. And at that time, the lender will charge a fee based on the final sales price of their old house to the lender. And during this selling period, the borrower didn't pay anything. They don't have to pay the monthly payment thing. So for them, it's a really good one. It's like a zero interest, low bridge loan for them. For the final, right now, because they change periodically, like during the pandemic, right now the fee is different. Right now is they will charge 2.4% based on the final sales price. And definitely during the processing time, we still have the cost for appraisal, title fees like that. But that's the way this program works. So if you have clients that want to upgrade or downsizing, eager to buy a new one, introduce them to this program. Especially right now, the rate is still a little bit higher. There's not a beat, right, from when you offer the price. But when the rate really drop, the investor will start to buy a house, and definitely the sales price will higher. So right now is a good timing, I think, to buy a house. Not too high rates, but it's still can negotiable with the seller. Okay, right time. That's all my presentation for today. And thank you for your time. And if you have any question, let me see. I put my contact here. You can scan the QR code. It's all my contact, and my phone number is here.
Can I ask a quick question?
Yeah.
The part about texting people and getting fined and all that stuff.
Mhm.
If I'm texting real estate agents, that doesn't matter.
No,
It's
it
just-
should be okay.
but it's
Business.
just if I'm texting.
Actually, it's how they definite. The thing is like the requirement is wherever your company located, as long as you tax to a Texas residence, you will, you have to follow this policy. So if you tax the realtor, but they don't consider right now I'm receiving the taxes based on the realtor role, I'm a tax resident, this you have the right. So I think you have to check with attorney. I the only thing I check from the news, I know if you text message to your existing clients or your current clients your service for, it's okay for talk about their current deal. But this is a new, or even you send the marketing thing to your previous clients may be a problem. Depends, because not the government words they sue you. It's the borrower. I mean the residents have the right.
This is only if the person has signed up for the do not call.
No, that's a separate one.
Separate one?
Yeah, the do not call is for phone call, but the tax they don't have to sign up.
Okay.
As long as they didn't give you the authorization, they didn't sign the consent, you can tax me. You cannot tax them.
Even if it's a real estate agent, like another building?
Everybody, like the wholesale. I saw this news actually. I from another video. It's for the retailer. They said, okay, Texas has a new one. I think, oh my God, this is a new one. Maybe apply to us. So that's why I searched it and I found, okay, there's a new one for the telemarketing. It's for everybody. Yeah.
So I wonder if we, through our CRMs, if we still have to do that whole application process, the feed process to be able to text through our CRM? Or is that covered in our?
I'm texting 500,000 real estate agents at a time.
So maybe you have to check, but I just bring it to your
Well, tell them you
attention.
said I was good.
Yeah, and then, the thing is like on your text message, you have to have the opt-out information.
Yeah, I got that.
Yeah,
As long as
okay.
that's there,
But
I'm
you
good.
have to register, first.
I have to register.
I think so. You just check with your attorney to specific, like you send a message to a realtor will be counted. I'm not sure, but I just want to share the information for you.
Okay, well, I
Yeah.
just want to say very quick, because we use EXP CRM, and in the EXP, they already clicked that. So I think we are covered as
Oh,
an
okay.
EXP agent. But you might want to double check with the broker, managed broker, because every time I send off something from our own CRM, there's already given me like a click box, say, oh, the prospectus consent. Not everything.
Okay, so when you send it out through your CRM,
Yeah.
it's automatically asking,
Right,
do you want to receive or do you want to opt out?
exactly.
Right.
Yeah.
So I'm
And so
okay.
you can send the first one.
You should be.
You
I'll
can
tell them
send
you
the
said I was
first
okay.
one, and if they,
Sorry, T.
so if you send the first one and they opt out,
Yeah.
then the system will automatically know unsubscribe.
Right.
If they don't opt out and they opt in, then you're
You're good until they opt out. Yeah,
Right.
yeah. Yeah, that's on the company level, the
Right.
whole EXP.
Okay, that's great.
Yeah.
But I'm using like Go High Level to recruit real estate agents.
Well, if you use your own company, then you have to register with the.
Yeah, this is a
Government.
Because you're not
just a
using CRM.
company base. Yeah.
You're using
Yeah.
an independent
I'm gonna tell them you said I could do it.
company. No, I'd talk to your broker.
Yeah.
Your broker has that.
Okay, thank you for you guys.
Thank you. What's our goal?
Do you want me to make the announcement? No, it's like that. You need to schedule it ahead of time. But this time. Okay, next time. Okay, perfect. Okay, I guess we have a special guest today, and from the home inspection company. So they will talk something briefly within 10 minutes, 15 minutes, okay? Yay!
Thank you. Anthony with WeLearn Home Inspections. We are modernizing the way home inspections are done.